Hi, I'm Kelly Houghton, founder and CEO of Global Index Group. We have teamed up with GMI Ratings to produce investment tools based on GMI's forensic accounting, also known as AGR, ratings. For the first time, investors have tools to incorporate estimates of the riskiness of fraud and misrepresentation into the investment process. The GIG High Governance Index has outperformed the S&P 500 by about 1.5% per year since the end of 2004. The index can be used as a benchmark for index funds, ETFs, and active managers. GIG is a new firm in the index business. We design, create, and build rules-based indices for investor use. We do this based on our own research at times, as well as by forming partnerships with independent research firms with content not previously put into index form. GIG, having built an index or licensed an index from someone else, is also in the business of building financial products such as ETFs. These financial products are designed to be useful investment tools for end investors. GIG has a team of experienced professionals with backgrounds in index design, fund marketing, and funds operations. I am the founder of GIG. Previously, I designed, created, and helped build the Russell Index family. In addition to my index work, I have experience in institutional investment management as well as pension consulting. Mark Twain popularized the saying that there are three kinds of lies: lies, damn lies, and statistics. We have taken the liberty of modifying the saying to fit the investment world. Over the last decade, the investing public has rediscovered that the individuals charged with running publicly traded companies and reporting on their financial situation are, in fact, human, and will, from time to time, break the rules to make reports that are not factual or representative. This is done to provide some kind of advantage to the folks filing the reports as compared to the general investing public. This should lead investors to think about potential ways to determine what is the risk that the data being provided in the financial statements of an individual company are tainted by fraud and/or misrepresentation. Forensic accounting is the way to solve this problem. GMI's AGR system starts with a training set of companies that have been accused of having published fraudulent accounting statements. They analyze the financial statements and the corporate structures of these companies to look for red flags for fraud. By examining over 400 variables using statistical techniques, they develop profiles of a fraud. The analysis is looking for clues as to whether or not something is an indicator of the risk of fraud. Some indicators are specific to particular industries, others have a general impact on the probability of fraud. The AGR process then takes the financial statements and the corporate structures of each Russell 3000 company and compares that information with the profiles of fraud to provide an estimate of the risk of fraud for each company. To examine the effectiveness of the AGR model, GMI has looked at the set of companies where the SEC filed enforcement actions and looked at their AGR ratings prior to the SEC filings. The ratings were divided up into deciles, and as you can see, the riskiest decile had the largest percentage of enforcement actions filed, whereas the least risky decile had the lowest percentage of enforcement actions. This ability to distinguish between more and less risky profiles has made AGR ratings a bestseller to the directors and officers insurance industry. Actuaries looking to set D&O insurance premiums are looking for estimates of the relative riskiness of various companies. The AGR ratings get top-notch reviews from these actuaries. Most traditional fundamental investment analysis of companies starts with the assumption that the financial statements of the companies are accurate and reliable. They are assuming the SEC and FASB rules and regulations will result in reliable data on which to make stock selection decisions. This includes most quantitative investment processes as well as analyst-driven approaches. In essence, most people picking stocks are doing so under the assumption that the instances of fraudulent and misleading financial statements are not going to recur. In recent history, this has led to problems for investors. Obviously, if you have bad information going into your analysis, then it becomes more difficult to add value through your process. Some investment managers have in place processes to try to detect dubious data, but they are the exception, not the rule. From the financial statement data and other information, analysts examine various financial ratios to determine the competitive position and financial strength of a company. If the financial data is inaccurate, then the analysis will be flawed. Many of the investment problems we have faced over the last decade or so have been associated with the fact that some publicly traded companies, such as WorldCom and Enron, have filed financial statements that were fraudulent or misleading. Facing that fact and looking for an opportunity to take advantage of this knowledge has led GMI and Global Index Group to develop the GIG High Governance Index as a method of incorporating forensic accounting ideas into an investment tool. We view this type of analysis as a necessary precursor to any kind of fundamental analysis of individual companies. This provides insights into companies not incorporated into most investment processes, and in particular, not incorporated into any benchmark index used by investors for their investment managers or their index funds. Global Index Group has used the ratings to build tools for investors. On the left-hand side of this slide, you see the process of corporations issuing financial statements, with the AGR estimation process providing risk estimates. Global Index Group takes these estimates and develops indices. In particular, we determine the index membership and weights of the GIG High Governance Index. The GIG High Governance Index is composed of U.S. companies with over $2 billion in market capitalization and an AGR rating in excess of 16. The index is market cap weighted. The idea behind the index is to provide a market-weighted tool that screens out companies with very high risk of being sued. This reduces the investor's exposure to fraud, but obviously it does not eliminate it. The index usually has between 700 and 800 large cap stocks, each with high liquidity. Combined with the market cap weighting, this provides a portfolio well suited to being a core holding in a portfolio controlled by fiduciaries concerned about governance. Over the 7+ years since the end of 2004, the index has returned about 1.5 percentage points per year better than the S&P 500. The index outperformed the S&P 500 for 18 out of 31 quarters in the time period, so it did not win every quarter. However, over the long term, it performed well, especially for a well-diversified portfolio. Past performance is not indicative of future results. We believe the successful identification of the riskiness of problems related to a company's financial statements will lead to long-term better performance, but there is no guarantee that this will actually occur. The beta of the index as measured against the S&P 500 is roughly 0.95. The market capitalization of the index is closest to the Russell 1000, which is lower than the S&P 500. It appears as if some of the outperformance of the GIG High Governance Index over the period as compared to the S&P 500 was due to having a lower average market cap than the benchmark. The index also outperformed the Russell 1000 by 1.2 percentage points per year. We broke the universe into cap sectors, and in each cap sector, the High Governance Index outperformed the Low Governance Index. This gives us reassurance that the outperformance was not all due to the cap size differential. The index can be used as a benchmark for index funds, ETFs, and active managers. GIG will be licensing index fund managers to run index funds against all of its indices. For fiduciaries that find the ETF format more attractive, Global Index Group is working to launch an ETF benchmarked against the GIG High Governance Index. Index funds and ETFs based on the High Governance Index can be used as core investments for investors of all sizes. They can either be used as standalone investments or as the core in core satellite investment structures. Fiduciaries wishing to limit the potential universe of active managers to companies with higher AGR ratings can use the High Governance Index as the benchmark for active managers as well. In short, the High Governance Index allows fiduciaries to embed forensic accounting and corporate governance into their investment process while giving them an opportunity to improve returns. If you have any questions about the index or the presentation, please contact one of our professionals shown on this slide. Thank you very much for your time.